Nokia just had the kind of quarter that says AI isn't only a chip story anymore, it's a network plumbing story too. This is Earnings Unscripted. We're on Nokia, ticker NOK, Q1 2026, and the date is 2026-04-23.
Yeah, and that's why this one mattered. Nokia makes the stuff that actually moves the bits. Mobile gear, optical transport, IP networks. Revenue was 4.5 billion euros, down from the usual Q4 seasonal peak, but comparable operating profit jumped to 281 million and operating margin hit 6.2%.
And comparable diluted EPS was 0.05, up 67% year on year. So this was not some sleepy legacy telecom print.
No, the standout was AI and cloud sales up 49% year on year, now 8% of total sales, plus 1 billion euros of new AI and cloud orders. That's Nokia turning up in the AI supply chain in a serious way.
Which is quite a rebrand for anyone tuning in cold. This is the part where the chatbot boom quietly becomes fiber, routers, and a lot of hardware nobody brags about at dinner.
Exactly. And I don't have the exact street consensus numbers in front of me, but the market reaction says this beat the fear level, especially on profitability and orders.
Also, tiny legal umbrella. This is not financial advice, just our personal opinions and a slightly dangerous amount of caffeine.
Fair. On earnings day, not the whole quarter, the stock jumped in pre-market, touched 1120, then faded through the session, but still closed up 4.31% versus the prior close. So investors liked it, just not as much as they liked the first 10 minutes.
Yes, the classic promising, calm down. What are you actually giving them credit for here?
Two things. First, the AI demand looks real. Optical networks grew 20% year on year, and the Infinera deal, which only closed in February, already seems to be helping rather than causing the usual integration headache.
That's kind of wild, actually, because mergers usually come with 6 months of throat clearing and weird org charts.
Right. Here, management was almost suspiciously upbeat. The CEO even said that when he went to the OFC conference, everybody was already Team Nokia, not Nokia versus Infinera. Corporate line, sure, but you don't usually hear that this early unless the thing is at least functioning.
Okay, but there's still a bit of accounting glow here, isn't there?
Yes, mobile infrastructure margin improved a lot, partly because last year's quarter had that one-off 120 million euro contract settlement charge. That's not fake. No, let me say it better. It's real improvement, but not pure recurring magic.
So some better execution, some old brews disappearing.
Exactly. And not every line was booming. Fixed networks was down 13% because they're deliberately cutting lower margin consumer fiber gear. That's actually part of the pivot.
Which makes the whole thing feel more intentional, less random luck.
Right. And the everyday life image from this call is great. Demand in optical is so tight that Nokia is expanding this very specialized indium phosphide fab in San Jose because lead times have stretched to 12 to 18 months. Underneath all the AI hype, it's basically little lasers and a supply chain trying not to choke.
That is such a good picture. The future of intelligence depends on a stressed factory in California making obscure optical parts.
Yeah, glamorous? No. Important? Yes. They also put up 629 million euros of free cash flow, and they raised the network infrastructure growth outlook for the year to 12 to 14%. So the quarter saying Nokia's pivot is gaining traction, but we should separate durable change from good timing.
Yeah. All right, let's get into the details.
Yeah, and the detail I keep circling is this quarter only really makes sense if you treat it as a company redesign, not just an AI sugar rush. From January, they basically changed the map of Nokia. Network infrastructure and mobile infrastructure became the mainframe, and the remaining legacy assets got parked in portfolio businesses. Anytime management redraws the org chart, I get suspicious. Sometimes it's camouflage. Here, I think it's also strategy.
Okay, but strategy or stagecraft? Because a fresh segment label can make an old business look younger than it is.
Sure, and right, some caution is warranted because the year-on-year mapping is on a constant currency and portfolio basis, so you can't compare it casually to old Nokia. But the interesting part is what they chose to shrink on purpose. Fixed networks fell 13%. And management basically said that's because they pulled back from lower margin consumer fiber gear. That's not demand collapse. management choosing mix over volume and leaning harder into enterprise switching, optical, IP.
So it's less makeover, more closet cleanout. They're tossing the cheap hangers so the good coats actually fit.
Very elegant, yes. But that's kind of it. Turnarounds usually fail because companies say they're pivoting while still feeding every legacy product line out of habit. Nokia is, at least in this print, acting like it can say no. And when you pair that with the AI order book and the optical demand, it looks less like random good timing and more like resource allocation.
I like that distinction, actually, because AI tailwind can make management sound brilliant for just standing in the wind.
Exactly. And there's another subtle reason I buy some of it. Hatard said, "The only thing we register are the actual purchase orders themselves." I liked that line because it's boring. In a market full of design win chest thumping, boring is good. They're basically saying, don't pay us for vibes, pay us for orders that actually landed.
Although the analysts immediately went, okay, lovely, then why aren't you naming the hyperscalers?
Right. And that's still an open question. I wouldn't invent a heroic explanation there. It could just be customer confidentiality, or it could mean Nokia's one supplier and a multi-vendor stack and the customer doesn't want the spotlight. But the accounting discipline matters more to me than the branding. They're trying to anchor the story in booked demand, not in some giant maybe.
So the reorg says where they want to go, and the order language says they're trying not to get high on their own supply. That's healthier than a lot of AI commentary right now. But the cash number still felt almost suspiciously sunny.
Yeah, that part needs a little de-romanticizing. The free cash flow was strong, but I would not annualize it in your head. A lot of that came from working capital, basically receivables unwinding after the Q4 build. That's normal seasonality, not a permanent cash machine. And Marco Wyren flat out warned that Q2 is typically a seasonally low period for cash as we pay employee cash incentives in that quarter. So the company is telling you, politely, enjoy Q1 and then calm down.
Which is fair. Markets do hear one good cash number and immediately start writing fan fiction.
Constantly. And this ties to margins, too. There's a temptation to hear AI see optical growth and assume Nokia suddenly gets NVIDIA-like economics. No! If you listen carefully, the story sounds volume-driven more than price-driven. So, yes, scale helps, mix helps, Infinera synergies help, but you're also ramping manufacturing and the cost base. They even hinted product mix could get less favorable later in the year.
So the bull case is not they discovered infinite pricing power. It's more like they're becoming more relevant in a market that's expanding faster than expected?
That's exactly it. And honestly, I find that more believable. If every company touching AI suddenly claimed miraculous pricing, I'd worry more. Nokia's version is more industrial, more boxes shipped, more optical capacity, more semis sourced, more integration work done. Even Wyren saying there's more demand than supply, that tells you the bottleneck is execution. It's not demand invention.
Which is such a funny image, really. Not a glittering AI miracle, just a very stressed operations team trying to get enough little lasers out the door.
Yes, the future arrives as procurement spreadsheets. That's usually how it works. So when I put the quarter together, I see a company deliberately reshaping itself, getting real pull from hyperscalers, but still living in a hardware business with lumpy cash and non-magical margins. That's actually a good combination. It means the story doesn't require fantasy to hold.
Right. So then the real question isn't whether Q1 was good. It obviously was. It's how durable this looks once the seasonal cash tailwind fades and the harder execution part kicks in. So where does that leave them heading into next quarter?
I think it leaves them in a better place than the market is willing to fully trust yet. Q2 guidance is pretty grounded. 5 to 9% sequential sales growth and only 12 to 16% of the year's operating profit landing there. So the next ask is follow-through, not another dramatic reveal.
Which I kind of like. After a quarter like this, boring would actually be evidence. Not sexy, but real.
Yeah. They kept the full-year operating profit range at 2 to 2.5 billion euros, but lifted network infrastructure growth to 12 to 14% and said they're tracking somewhat above the midpoint.
That's management saying the AI lane is better while the rest of the car still has some old Nokia parts rattling around.
That is rude and also fair, because the market's basically deciding whether this is an AI infrastructure name in disguise or just a telecom stock with a sharper haircut.
Exactly. And next quarter is where that gets tested. Cash should dip seasonally because of incentive payouts. Mobile margins are expected to be softer in Q2 and Q3, and the supply chain is still tight. So if investors want to dream on Huddard saying machine-to-machine traffic will become the primary driver of traffic, okay, I want to see shipments, lead times, and that fab ramp behaving.
Right. The future still has to arrive on schedule. That's sort of the whole Nokia setup now. If they keep turning hyperscaler spending into actual orders and actual delivery, the re-rating starts to feel earned.
And if they stumble, it drops back into the old valuation bucket pretty quickly. Hardware stories don't get endless patience.
So maybe that's the clean takeaway. AI is giving Nokia a genuine second act. But second acts still need stage crew. Little lasers, stressed factories, all of it.
Glamour finance.
All right, we'll leave it there. Thanks for listening.
See you next time.
If you want these earnings chats to just show up in your feed, following the show is probably the easiest way. And just so we're not pretending otherwise, this episode was AI assisted from the company filing and the earnings call transcript. So if you've got feedback or a ticker for us, send it to earningsunscripted@datamadness.ca or hit the X link in the show notes. All right, take care.